Well, here's something important to think about. What can you do between now and the end of the year that could help you protect and grow your retirement savings? Here to talk about that very question is your retirement professor. It's Scott Brooks. Scott has taught retirement education for over 20 years now, and he's the CEO of Financial and Tax Architects, one of St. Louis's largest financial firms. Scott, good morning. How are you?
Morning, Matt. How you doing?
Doing fine. So let's get straight to it. What can people do between now and the end of the year that actually might move the meter a little bit?
Well, look, it's easy to get distracted with the pandemic, with the economy, with the election, and the holidays. But there are three specific things we're going to talk about today that you can do between now and the end of the year that could mean, well, tens of thousands, and for many of your viewers, hundreds of thousands of dollars in their nest egg by just making some simple strategy moves. Now, the first one is maxing out your IRA and 401k. Now, the maximum contributions for a 401k is $19,500. Now, for an IRA, it's not over $6,000. It is $6,000. But here's the thing. If you're over 50, you're allowed catch-up contributions. Now, this means you can contribute an extra $6,500 to your 401k and an extra $1,000 to your IRA. That's a lot of money.
So what's number two?
Looking at rebalancing or properly allocating your investments. We've had huge swings in Wall Street this year. We went from record highs to a significant correction due to the pandemic, and then a really wonderful recovery that happened right after that. Now we expect increased volatility from the pandemic and, obviously from the election too. This volatility has almost certainly thrown your portfolio out of whack. Updating and rebalancing your investments should be your top priority right now.
What is the third and final year-end strategy here?
Well, the third thing is what we call year-end tax planning. And there are a few ways you could save a small fortune in taxes by doing some year-end tax planning. You can contribute to qualified charity. You can take advantage of tax loss harvesting, where you sell your underperforming stocks to offset your gains. And the last one is converting your traditional IRA or 401k into a Roth. Now, converting to a Roth means you'll pay more taxes now, but you'll get tax-free income when you withdraw this in retirement.
Scott, we're just kind of scratching the surface here. How can our viewers learn more?
We'll show you how you could save tens of thousands, if not hundreds of thousands of dollars in taxes with a customized retirement tax analysis. Now, this analysis is free and there's no obligation, but we're only going to do this for the viewers who call us today.
If you've saved, my friends, more than $300,000 for retirement, call to schedule your free retirement tax analysis now at 314-501-5615.